It is now my pleasure to turn today's program over to Kathleen Trautman with Zurich. Kathleen, the floor is yours.
Thank you. Hello, I'm Kathleen Trautman, a member of the Zurich Programs Marketing Team, and I'm pleased to welcome you to today's webinar, Pump Up Your Opportunities with FITLIFE. The webinar is brought to you by Z Programs Match, which is an online tool that connects retail insurance agents with Zurich program administrators. It's the direct link for you to gain access to this coverage as well as more than 50 other Zurich programs. Now, today's webinar is going to run approximately 30 minutes with 10 minutes reserved at the end for questions and answers. Feel free to submit your questions at any time during the webinar by typing it in the Ask a Question box on the lower part of your screen. Today's webinar will be recorded, and we will be emailing you a link to the on-demand video. It will also be posted in the Knowledge Center on zprogramsmatch.com. So let's get started. So you can see with today's agenda we're going to have an overview of the program and a little about the program administrator. We'll give you some updates about the program, some tips for successes within the space, some of the emerging issues, some recent successes that might hit a sweet spot for you, and we'll have a Q&A session at the end. So now I'm going to hand this over to a very special speaker today to talk about the FITLIFE program. Brian Rawlings is a senior underwriter for the Fitness, Wellness, and Spa program. He has had several years' experience in this industry, including being a former YMCA recreation director. So Brian, I'm going to hand the webinar over to you so you can share some great insights about the FITLIFE program.
Great. Thank you, Kathleen. Thank you for all your help putting this webinar together for myself and for the participants today. And thank you, Joella, for your assistance in moderating and maneuvering our webinar for all the participants today. As Kathleen mentioned, you saw the introduction screen with a little bit of my background. To expound upon that just a little bit more, of my 13 years within the insurance industry, my last 7 years have been spent specifically within the fitness and wellness space. I was with another carrier previously for over 5 years and have now been with the venture and our partnership with Zurich for nearly 2 years in launching and developing and moving FITLIFE forward. Kathleen did a great job of kind of going through our agenda for the day. Give you a brief overview if you're not familiar with venture programs, the program administrator that I work with and for, and our partnership with Zurich on the FITLIFE program. We have been in existence since 1993, aligned with Zurich since 2005, so a long, healthy, fruitful partnership there. And in that partnership, we launched the FITLIFE program in the tail end, the fall of 2017, when I came on board joining venture in this joint initiative. Really want to spend today kind of giving you a little bit of an update. We did a webinar a year ago, and now that we've got about a year and a half under our belt within the program, kind of giving you the where we've come from, where we are, and where we're going, as well as hopefully giving you some sales tips on agents that have had success within this space with our program, what kind of some of those key button issues have been, what some of their successful endeavors have taken them, and how they've gotten those wins. Kind of a quick look at the program here by the numbers. The slide states over $4 million in written premium, actually kind of giving you an up to the minute, if you will. We have actually crested $4.5 million after a very fruitful January. We've had a nice start to the calendar year within the program space and are very pleased with that. So we've pushed the gross written premium to over $4.5 million. You can see our average account size there. It's listed as $73,000. That's actually adjusted for one large account down to $48,000. And with the January that we've had, that number is actually pushed over $50,000. So we've really been able to do, and where we're kind of finding that sweet spot, to use that cute cupcake logo there that Kathleen had found as part of our program today, is we've kind of positioned ourselves as a middle market program. And I think that's where we have found that sweet spot and where we're having a lot of success, and we'll talk about that more as we go through the slides. Kind of give you a brief overview of what we at Venture do and what I look to do as a practice leader for venture programs in the FITLIFE in conjunction with Zurich, along with everything that they do, Kathleen and her team and Z Programs Match, to kind of get the message out on FITLIFE. I'm very active on social media. You'll see both the Twitter handle we utilize, at FITLIFE-INS, LinkedIn, if you want to find me on there. I push out a lot of content. I post anything I see from a risk management perspective related to health clubs, and these are the kind of pieces that a lot of our agents use to kind of tweak their expertise and their talking points when they're going in and talking to prospects or their current clients within this space, to have some good talking points and to stay up to date on what some of the relevant topics and concerns are within the fitness space. We are aligned with Club Solutions Magazine. This is a online and print form magazine that I really have liked to partner with over the years in the fitness space because they're solutions-based. That name solutions is really prevalent in terms of the way they do their messaging and their deliverables. And with that, we do a lot of content. I've recently done some interviews with them. We've actually had one of our agents in partnership with one of their end-use clients, the gym owner itself, do kind of a Q&A that's been in there. So it's not just an advertisement platform for us. There's also good risk management content that we get in that. And that really kind of aligns with the approach that we look to take in the FITLIFE space, in that we try to move, as always, everything beyond price if we can. It's tough at times, of course, with the right risks. But talking about coverages and controls and risks, and kind of moving it a little bit off of price and more towards coverages and risk management and best practices and service. That, of course, aids in retention in the over the long run. In terms of resources, I'm proud to announce that we have recently added our first underwriter to the team, so we're growing. As long as with the premium, we're adding underwriters, and we've just are having some discussions to look to continue to grow our team as well. So FITLIFE is growing in all ways, shapes, and means in this space. One of the things that I really made sure to do that first year, as this slide says, listening to our members, and the reference in this slide is you, our agent force out there, agent partners, are truly our members. And so my first year within the program space, as I traveled across the country, had a lot of interaction on email and phone calls with agents throughout the country, I asked a lot of questions in terms of what they were seeing in the space, comparing and contrasting that to my knowledge base, having been in the fitness space on the insurance side for over 7 years with a previous carrier, and kind of really getting to make sure that we had aligned and we're aligning our program to move forward and be a leading edge in terms of the coverages and the forms and the offerings and the language that we were bringing to the marketplace within this space. And so Zurich has been amazing to work with over this last year and a half, and we've done a lot of fine-tuning, and we're not done yet. I was just in Omaha with some of the Zurich partners that we work with just 2 weeks ago, and we spent that time again kind of starting to chart that next 6 to 12 to 18 months in terms of some continual fine-tuning. So we're going to be constantly evaluating the market space and making sure that our program stays on top from a coverage standpoint. This slide indicates some of those things and changes that we've made. You see in the abuse form, when we first came to market, we only had a claims made option available. Now in most states and most situations, we can offer an occurrence form, which sometimes obviously makes a little bit of an easier transition if they're currently on an occurrence form, for instance. And we can now consider higher limits. We'll take a look at the controls, the exposures in place, but on a case-by-case basis, we will look at should we extend the abuse into the umbrella if it gives us a competitive either to match up or to exceed the current carrier environment. And of course, again, we'll kind of make that on a case-by-case basis relative to the controls and the exposures available in that risk. Day camp operations. When we first came to market, we had a little bit of hesitation in terms of day camp operations, and we're not talking about your child watch where you might put your son or daughter in the care of the gym for maybe 2 hours while you're working out, taking a class. We're talking full-scale summer day camp operations that a lot of those middle market, privately owned, high-end amenity clubs, tennis and racket clubs, athletic clubs often have to serve their member population. We now have a comfort with day camps, and we'll assess that comfort on a case-by-case basis. We have our own questionnaire that, again, gives us a sense of the operations and the controls and make sure that we can assist in any way in developing and recommending best practices to make it the best exposure for all involved on that front. Supplemental applications. We are now proud to say that we can and will accept a number of competitor applications all the way through the binding process on the initial term. Being, again, within this space for 7 years plus, I'm very familiar with a lot of the carriers out there and the questions they ask within their questionnaire and supplemental process. So I've worked with Zurich to kind of share that comfort level, and now we're able to accept some additional supplemental applications instead of just making sure we get our FITLIFE questionnaire. And again, that aids in efficiency and turnaround time, which I know is important to you all in your day-to-day pursuit of opportunities in this space or otherwise. We will look to get our application at the first renewal term, And we also will have a shorter renewal form application that we can bring forth as well to the marketplace here very soon. We did a complete refresh on our professional form update. We had a bit of, from my perspective, a bit of an antiquated form in terms of some of the exclusions and wording and offerings that were provided. It's a standalone limit now. It's a 1 million, 3 million that dovetails with your 1 million, 3 million GL that we offer, and just kind of gives that robust limits perspective from two silos of limits, and has the appropriate wording to make sure that you're covering any professional exposures that that gym may have, from a personal trainer, a Group X instructor, massage therapists, estheticians, and the like. Of course, once you get into the form, there are some exposures which we may not have a comfort level with, and we may want to address separately outside of the form and the pricing tools that it utilizes. New pricing tools at our disposal. As we're looking to continually make sure we're competitive within the marketplace, always looking to kind of walk that line between, competitive and wanting to not necessarily be the cheapest option in the marketplace, but certainly being competitive for you from a pricing standpoint while bringing forth great coverage forms, broad coverage approach, along with all the claims and risk management services that Venture and Zurich can provide in the marketplace. So with that, we looked at our pricing from several angles. We use ISO, which is revenue-based within this marketplace. A number of the carrier competitors that we work against use proprietary rating bases, perhaps number of members, perhaps number of active members, perhaps square footage. So we've done a couple of things to kind of take a look at the ISO rates, to kind of briefly go over those. ISO is not the ISO class code for this we predominantly use is 44315, not to get into the weeds for you on that. But it's not a homogeneous class code if you think about it, because you could represent everything from maybe a small studio that has maybe a bar type operation that has simply an aerobics type floor and a ballet bar, all the way up to one of those full amenity-based clubs that has programs and rock walls and water slides and pools and daycare and day camps and the like. And you're using that same class code for that non-homogeneous group of business that falls within this space. So we've done a couple of things. We're now utilizing the various writing companies that Zurich has at their disposal and their filings a little bit broader from a perspective of aligning that with where the states may fall from an ISO rate perspective. That's given us a little bit better proclivity to match up in certain situations. We filed an additional credit that helps offset some of those discrepancies between the proprietary rating bases that are out there and the ISO rating basis, which again has aligned us to better within the marketplace from a pricing standpoint. And I think some of these tweaks that we're talking about from a coverage and appetite perspective, as well as these pricing concessions we've made, have again kind of geared towards that success that I've spoken of, not just in January, but our fourth quarter of the last calendar year, if you will. We really started to hit our stride in terms of our success rates and our bindings. And then we're also very amenable to using large rating options, et cetera, if they qualify within the states. Relative to the exposures and what we see within that risk, we certainly can use some actuarial tools at times, but we'll use all the tools at our disposal within the Zurich filings and our appetite, and of course align that with the risk and what we're seeing within the marketplace to give you the best, most competitive product we can on every risk. Keeping us moving forward, of course, we're using kind of this New Year's resolution and some of the fitness vernacular today in terms of getting results and those type of things to kind of try to lighten up our wonderful, fun topic of insurance and fitness. So when you're out there trying to pursue these risks, you love the FITLIFE program, you love working with Venture, you love Zurich paper, and you want to go out and maybe pursue some of these opportunities. This next slide, I want to kind of just give you a little bit of a flavor of what I see sometimes, the approaches that agents have taken within this space, some of the tools that they've used at their disposal when brokers go out and have conversations and pursue risks. And number one is kind of that coverage analysis. There's a broad brush of approaches within the marketplace when you look at some of the various carriers that play within this space. You get everything from full-blown excess and surplus lines paper to what I'll call kind of quasi-E&S paper to full-blown admitted paper, which is obviously the approach that Zurich is bringing to this program. All Venture programs and our Zurich partnership in the FITLIFE space is no different, is on admitted paper. And I think that's an important point to note when you're kind of asking that question, hey, can I review your current coverage, maybe see where I can make sure you're covered appropriately. You want to make sure they got the right coverages in place. And you want to make sure they don't have too many exclusions or limiting language, and look at the ancillary coverages available and what they may or may not have. Some examples of that you may see within the marketplace if you're reviewing the current coverage forms of a fitness club or health club or athletic club. Might they have a waiver warranty in place that states, if Kathleen is working out at my club and she is injured and the claims representative goes to look at the waiver to say maybe that the claim will be denied or so, or what's going to have in place because of the waiver, and now for some reason when Kathleen signed up that day, the waiver was not completed properly or was not completed at all. That waiver warranty limitation may say coverage is now null and void, and now you're leaving quite a gap in coverage for that insured if they've got that kind of language. You won't see that on this FITLIFE program. Do they use designated activity exclusions, or a catch-all activity exclusion is often something you'll see within this space. That's that kind of exclusionary form that maybe has 20 different activities listed out of which they're excluded. Now, it may have crazy things like water polo that obviously is not something that they're going to do, or something of that nature, or horseback riding or something. But it may have like a rock wall exclusion on there. It may have a special events exclusion on there. They may have some events that they do in their parking lot or in the community to drive membership, give back to the community, be partners within the community as a health club facility, and you want to make sure that there's not exclusions or catch-all exclusions that are limiting their coverage from that perspective. How is medical payments handled? Do they have a total med pay exclusion? Do they have a med pay exclusion for child care activities? You'll see that often at times. Most of the programs, and we are no different in this, so I want to be clear on that, we do exclude medical payments for athletic participants. That's built into the CG0001 ISO form that we utilize. It's exclusion L, I believe, under MedPay. So if you're working out and you just slip and fall on the treadmill, we're not going to write MedPay checks for that. Unless there was perceived or alleged negligence, then they could certainly bring a claim forth under the general liability. However, MedPay is still one of our leading claims, and you'll see that in the slip and fall realm. If you think about these gyms and health clubs with the egress and ingress that they have, inclement weather, as many of us are experiencing right now, as well as the water that flows throughout these facilities and locker rooms, pool areas, hot tubs, and everything else. So you want to kind of take a look at their MedPay piece and see what do they have, what do they not have there, and how may you be able to bridge any coverage gaps for them moving forward on that front. How is their property handled? Obviously, coinsurance is something that we all deal with and talk about. The approach that Venture's taken with Zurich in this marketplace is, again, we're broad. We look to blanket the building, the contents, the tenants' improvements and betterments, and we also provide a blanket limit for the business income, and we do so on agreed value. So while we certainly want to make sure we have the proper valuations for the buildings, and we'll use tools to assess that, we certainly want to make sure we have everything accounted for, so we're rating for it correctly. We want to make sure we're not being punitive from the standpoint of if they own multiple facilities, or giving them that little bit of bandwidth in terms of their limits from a property standpoint by eliminating coinsurance with the agreed value provision and having a blanket basis for them. That's been a nice win for us in many cases within this space. Take a look at how their abuse is structured. Is it vicarious only? Does it provide innocent party defense? What kind of form language does it use? And those type of things. Do they even have abuse within their program? And then professional liability as well. So that kind of takes care of that coverage piece on that front. Relationship is my next bullet point on this slide as I continue to move forward. What you'll find in this space is there are some great brokers out there that kind of specialize in the fitness space. And by specialize, I mean that may be all they do, or they have a kind of an offshoot of their program division within their agency that focuses specifically on that. And they'll attend trade shows, they'll advertise and market within the club solutions and the different marketing modalities of which I talked about. They'll have maybe a social media presence and web pages and the like that kind of push towards the fitness space. So kind of important to understand, I think, when you're pursuing an opportunity is what drives the decision maker in terms of the relationship they want. Do they want to align their insurance program, their risk management with someone who specializes, or are they looking for that local relationship? And that's kind of an important conversation to have to find out where they are, where they may be more comfortable with, and kind of that moving forward. So I bring that forth because I think there's a lot of conversation that often happens in this space with some of the specialty agents that do a great job out there, but sometimes someone may want a local feel, and you can kind of have that conversation to see what may or may not work for them moving forward. Understanding their business, what are the key issues and trends, and what keeps them awake at night? And we're going to look at a slide here in just a moment looking at some of the key trends within the market space to give you maybe a couple talking points or some good awareness of what's happening out there. But I also want to kind of give you a couple things. I mentioned slip and falls. That's one of your key claims that happens. The other key claim trend we see within this space very often is injuries from equipment failures. So looking if they have preventative maintenance and protocols for when a piece of equipment is inoperable, how they handle those type of things. That's kind of your claims trends really comes in the slip and fall and the injuries from equipment failures. And then price, of course, always still matters, and we've talked about some of our pricing metrics within this space. I do see we have some questions within the Q&A segment there. I will address those at the end, so please hang on, and once we get through our last slide or two here, I will make sure to try to address all questions as best I can. As I mentioned, there's always something new. I wanted to kind of give you just a very brief slide and presentation on the emerging issues in the club space. So again, you've got some knowledge base to go in there and maybe talk to your clients about how they're protected from a coverage standpoint, from a risk management standpoint, maybe from a policy level standpoint. And maybe do they have a cyber policy in place? What kind of cyber protection do they have? We're seeing more and more attacks. We often think of the national headline type attacks that we see in terms of like some of the larger retail stores that have been hit throughout the country and the like that hit the national news. But in reality, most of your cyber attacks look at more what I'll call medium-sized businesses, middle market type business, where the hackers and criminals think that maybe there's a little bit less protection in place, or they can worm their way in there a little bit. And so I've really been a proponent of lately kind of talking to clubs about, do you have full cyber protection? Sometimes you can have an endorsement option on the package, and we will be bringing one of those to the marketplace very soon. I'm happy to announce that we're working on finalizing that, and that'll be part of our umbrella package actually with Zurich and the form language they use there. So that's sometimes an option and meets their needs, and there also may be an option for a full-blown cyber policy. If you think of all the information from an EFT billing perspective that a gym often has, HIPAA-type concerns and the like. Active shooter, just within the last quarter, there was a yoga studio in Florida that you may or may not have seen hit national news that actually had an active shooter situation. So, thinking about these things from a risk management perspective, topics we may or may not had to address with this much vehemence 3, 5, 10 years ago within the health club industry or other industries, certainly should be a talking point and something that you may be able to show some increased level of concern and ability to help protect their members, their guests within their facility, talking about developing proper active shooter policies and protocols, working with their local authorities, making sure that's a part of their emergency response plan instead of maybe just fire and medical and weather that they may have addressed or thought of more in the past. So that's something I wanted to bring up. Abuse and harassment, we do see claims within the space, not necessarily just involving children. Of course, this has all been heightened within kind of the sports and fitness realm in recent times with Michigan State, USA Gymnastics, going back to Penn State 4, 5, 6 years ago. I think there's increased attention within this in the marketplace, which I am firmly behind 100%, in terms of making sure that gyms and health clubs are taking the proper steps, again, to protect all of their populations, but in particular their most vulnerable populations of children, elderly, and the like, in terms of do they have proper background checks, do they have proper crisis management protocols, do they have policies in place in terms of no tolerance, and those type of things. And we've got a number of resources within Venture, and Zurich can certainly help as well with their risk engineers in terms of assessing and making sure they've got the best policies in place to protect everyone, as well as a strong coverage form that backs them in the event that there is an allegation or a claim brought forward. New amenities and services. Again, in this middle market space, what you're seeing is a lot of the privately owned clubs, tennis and racket clubs, athletic clubs, are repositioning themselves a little bit. They're retooling their amenities and services to kind of continue to compete within the ever-evolving, ever-changing marketplace that brings forth not just the boutique studios, the storefront type operations, but also your high volume, low price models of your Planets, et cetera, that are out there, as this continued expansion of opportunities for consumers in the health club space. So what you'll see some of these clubs adding or improving is you'll see water slides and water features within them. You'll maybe see climbing walls. Cryotherapy is becoming more and more prevalent. This is one exposure that FITLIFE is not willing to accept at this moment. You would need to place coverage elsewhere, but bringing it to light because I am seeing it and seeing more and more conversation, not just from clubs and insurers, but when I visit trade shows, etc. And then your spa services are increasing within this space as more and more clubs are either adding spa services or they're increasing the spa services offerings that they have. Transgender locker room and accessibility, again, quite a talking point amongst the industry right now in terms of what's the best way to handle those type of situations. How should you be proactive? How should you be reactive? And just kind of a lot of conversation about that. And I think you'll see more on that in the coming months and years coming out through some of the industry publications and agencies that are out there. I've seen a recent rash of concerns within the industry lately as I monitor all of those industry publications and email blasts and like in terms of consumer protection, specifically involving the Telephone Consumer Protection Act. There's been some lawsuits there in terms of gyms maybe not following those in terms of contacting people via text or phone. And then membership cancellation lawsuits. I've seen a little bit of an uptick there in terms of, we all can go back through some of those horror stories we've heard probably of people trying to get out of that elusive gym contract. And so states are looking to protect consumers more in terms of their rights when they want to get in and out of gym contracts appropriately in the language that they're supposed to use and the notification processes they're supposed to use. So we've seen some things there that may be a good talking point to bring up and maybe bring some publications forth to a prospective insured to educate them and help them and show your expertise and willing to be an advocate for them within the space as well as their trusted agent or broker partner. Contracted and employed staff issues. I've seen a number of lawsuits again here. It may not necessarily directly impact the insurability of what we're talking about from a property and casualty standpoint, but that free from control definition when you're talking about a 1099 employed where most of your personal trainers, a lot of your Group X instructors lie, versus an employed staff person and how they're paid, how their time is allotted in terms of maybe they teach a yoga class, do they get time to prep, clean up, set up, and the like. How does all that kind of fit into their pay structure? There's been a number of lawsuits throughout the country brought forth in that arena, and as well as benefits rights, and again, the paid for prep time, setup, cleanup, etc. Kind of closing from my standpoint in terms of a presentation, then I'll kind of go into the Q&A portion. I've got some commonly asked questions myself, and then I'll address the questions that we have. Here's just this kind of quick bullet points. Again, that middle market space of these are recent wins we've gotten. We wrote a group of several high-end private racket clubs up in the Northeast. We wrote a high-end private social-based clubs. We've written a number of those in the last, I'd say, 6 months. I'll call them country clubs without golf courses. You can probably wrap your head around the type of operations in your community that may kind of fit that niche. We've written several groups of locally owned gyms, so these would be kind of a franchise concept within a community. They may own 4, 5, 6, 7 branded under not one of the national names, but a locally owned and operated name. And then we recently wrote an amenity-based full-service athletic club in the Northwest as well. This kind of just gives you a quick overview and an infographic type look at what we look to pursue within this space. I've mentioned all these throughout the presentation, your tennis clubs, athletic clubs, independently owned and operated, single and multi-location. We do look at the fitness franchise operations. You can go through all the myriad of franchise concepts that are out there. We will entertain all of those, as well as the niche fitness boutique concepts. And then we also will look at destination and day spas within this space. I'll kind of quickly go through these questions. I just kind of pulled these in preparation for the presentation because I get these a lot. So I thought they'd be good to highlight both from an agent and potentially from a client perspective when you're talking about coverages and the like. Does your policy provide professional liability, and how does that work with the GL? I addressed that earlier to some degree. We will put an exclusion on the general liability for professional services that then pushes any bodily injury that may occur from the advice or counsel of a professional, which is defined within the form. But again, we're talking about your Group X instructors, your personal trainers, massage therapists, etc., anyone who's got kind of a licensed professional approach to their job. And we'll push that to a separate limit of insurance and a separate coverage form. So that kind of, again, gives you a little bit of separation of the PL and the GL and gives you those two silos of coverage. Can you cover tanning? Yes, we can. We do have some restrictions in terms of the number of tanning beds which we'll entertain. That can be either individually at a club or collectively amongst a group of clubs. So if you have a risk that has tanning, please do bring that forward and we'll see if it fits our appetite. When we do cover tanning, we cover it on a very broad form basis and that we are silent on the underlying. So there's not a sublimit. There's not any exclusions at this point in time for long-term skincare damage or damage to eyes, etc., that you'll see on many forms. Because of that broadness, we do have that restriction sometimes in terms of the number of tanning beds we'll entertain, and we will not take it into the umbrella, but we will have that $1 million of silence form on the underlying. We talked about the property and the blanket and AV. No need to belabor that further. Do you have other markets available? At this time, we are certainly happy and thrilled to be partnered with Zurich. Zurich's great paper, great resources. So Zurich is the market that FitLife continues to bring to the marketplace right now in terms of our package product, which would be your property, your GL, all the ancillary lines that come with that, your professional liability, crime, equipment breakdown, abusive acts, etc., as well as the umbrella. And then we do have some other markets we can use at times for some of the ancillary coverages that we've talked about, and please get with me if you're interested in learning more about that. But Zurich is our partner on the package product. We've talked a little bit about exclusions you should be aware of. I don't want to belabor that anymore in terms of the waiver warranties, the activity exclusions, and the like. What kind of turnaround time do you usually need? A lot of these opportunities kind of come fast and furious. I know you're all out there working hard trying to write business. Really, probably the minimum time, if I'm being fair to you, to us, etc., would be 3 days minimally for us to log, clear, make sure we've got the rights to an account with Zurich, get some rating in place, and then get you some indications, and then potentially bind. Now that, of course, would be minimum in respect to any additional information we need from an underwriting perspective, whether it be copies of waivers, additional questions on loss runs or loss runs themselves, questionnaires, etc. But if it's kind of a cookie-cutter account, within 2 to 3 days, we can generally get you something. We certainly endeavor to be a market that can be responsive to you on that front. How do we submit something to FitLife? There are several ways to do that. You can submit it to myself directly. brawlings@ventureprograms.com, I think, is your best way to do that. You can also go on our website through Venture Programs or through the Zurich Z Programs Match portal and find ways to submit business to us and to inquire. But the best way, submit it to me directly, and we're happy to turn that around and get you some insight and input on that as well. Can you provide wind, hail, flood, earthquake coverage? We can. Obviously, we'll have some restrictions and guidelines to follow within various parts of the country, whether they be coastal or the beltways, etc., with some of the wind and hail. Zurich's got excellent actuarial capabilities and modeling capabilities to assist me and our underwriting team in assessing those cat perils and seeing what we're comfortable with within our guidelines. But we can provide consideration on all those perils on a case-by-case basis. We are not a market for workers' comp at this time, although you could submit that directly to Zurich through their different means of doing business, but Venture Programs itself is not a market for the work comp. We're concentrating on just the package product. And then finally, what about 24/7 operations? We will and can consider those, whether they be staffed or unstaffed. It's just going to provide a little bit different direction in terms of some of the questions that I will ask you from an underwriting perspective. I'm now going to take a few moments here just to kind of go through the questions that I've got, make sure that I can address them as well as possible. And, of course, anyone can feel free to reach out to me as well after the presentation.
And, Brian, while you're doing that, I'm just going to ask Joella to just push out the survey so that the others that are listening to the questions, they can just complete our survey so that we can get feedback about today's webinar, because we do use that information to help with our future webinars. And I'll let you go ahead and take care of the questions, Brian. Thanks.
Perfect. Thanks, Kathleen. And we'll look to wrap up in respect of everybody's time here today, as we've got a little over that 30 minutes time demarcation point, but want to make sure to address everybody's questions here best I can. Got a question revolving maybe a risk with squash courts, CrossFit operations, leased office space within the gym, and garaging for vehicle storage. Yes, on the surface, those are all appetite considerations for us that we could look at. We can consider CrossFit. We'll talk a little bit about the events they're having and how we may or may not want to deal with those. Leased office space, you will see a lot of these gyms that maybe lease some office space within their facility to either other operations that aren't even fitness-based, or maybe they've got a physical therapy office or somebody else that they're partnering with to provide services. We can look at that. And then garaging and or valet services we can address as well. Liquor liability is available, so we can look at that. We can provide liquor liability. Buildings owned by various LLCs. A lot of these entities you'll find as they grow, especially the franchise nature of the business, they'll add a number of LLCs and named insureds in the policy. We can always assess the ownership and how they dovetail together from an operational standpoint, but we can surely consider those. Looking at an appetite guide, we can certainly provide that. I try to provide some notion of that here within the presentation today. But if you want to reach out to me, I can get you some marketing materials that we have that kind of spell out our appetite just a little bit more, and you can also get that through the Z Programs Match portal as well. A rock climbing facility where that is their main exposure would not be a fit in the program. We will look at rock walls if they are amenity within a health club or athletic club facility, but if they are purely a rock climbing gym, that does not meet our appetite at this time. We can look at various product sales. It's going to be what we're looking for generally in the product sales arena. We see a lot of clubs where we'll use a 18206 or 18247 type class code to represent some of the sporting goods they may have for sale. If they're a tennis club, they may have rackets and tennis balls. They may have hats and T-shirts and those type of things, water bottles, etc. We can handle the product sales for that. If they've got vitamins and supplements, we can look at what makes sense there. Sometimes if they're doing any kind of relabeling or rebranding, we're going to want that covered under a separate policy for the products. We do avoid currently any cannabis type based products and the like from that standpoint, as you're seeing more and more there. So we'll do a case-by-case analysis if it's outside of the quote-unquote norm from a product standpoint to see if it's something we're comfortable with. But we can, as a general rule, look at different products that they may sell, including if they have restaurants or cafes, smoothie bars, and the like from more of a retail side. Yes, we are an admitted paper. We are not subject to a minimum premium. We kind of have a premium appetite. Our program is not built for what I'll call the true small business within this space, which I'll define loosely as kind of under $5,000. Being that, as you've heard me talk about the program today, we do look to bring kind of a robust product to the marketplace with various enhancements. We use property enhancements. We use general liability enhancements. We provide the professional. We look to provide the abuse. So once you start adding on the ancillary coverages, the enhancements, etc., to make sure we're providing a full package product within the space from a program standpoint, it really kind of prohibited us often from getting down to those lower price points. So I kind of usually, again, loosely define our appetite premium-wise, $500, $7,500 and up on a total account basis to use that as kind of a good litmus test. Doesn't mean we can't do it and won't do it, because again, we are not subject to a minimum premium. Just send apps or accords to my email, correct? Once again, my email direct is brawlings, BRAWLINGS, @ventureprograms.com. If you want to just send me an inquiry and say, hey, look at this website, see if it fits your appetite. If you want to send me accords and maybe you have a questionnaire from another carrier or whatnot, I can quickly triage that, tell you if I think it's going to fit our appetite, get it logged and cleared through Zurich so that we have the ability to work on it, and then we'll go from there. What we generally look to do is get you a pricing indication, and that will honestly usually be subject to some additional underwriting questions or needs. Once we kind of gather everything else and make sure we've got all the appropriate underwriting information, if we have any referrals that we need to make to Zurich, etc., then we can look to more formalize that process, bringing forth a proposal that's bindable and the like to you. Last One of the last questions I see is destination spas with hotel rooms. Destination spas, yes. If they do add lodging, then that would not be a fit for the FITLIFE program. However, I can proudly say in this joint initiative webinar today that Venture and Zurich also partner on a program called FITLIFE, where we could look at hotel rooms that also have a spa component to them. They write a lot of destination resort-type spas within their program. So again, you could still work with Venture and have Zurich paper potentially for that risk, just not within the FITLIFE program. Our sales audited. This will be a case-by-case. Again, we're going to look at the size of the account. We're usually willing to discuss an auditable provision if that's a matter of competition, and we're working on that with Zurich to see if we want to make a final determination on how we're going to approach it. But there are a number of carriers out there that do make their paper non-auditable. We just want to make sure we're getting appropriate updates from a revenue standpoint and the, again, valuation of the building. Okay, with that in mind, I'm going to conclude my comments. I see no other questions that are coming into place right now. I'm going to turn things back over to Kathleen so she can wrap us up and take us out. I thank everybody again for their time. Please reach out for me with any questions or comments, and I look forward to working with you, all of you in the future, to try to get some good wins within the fitness space. Kathleen?
All right. Thanks, Brian. And what I want to share with everybody real quickly, I know we're over by just a couple minutes, but just want to remind everybody about zprogramsmatch.com. And, if you're looking to find out, like Brian referenced, the fact that there is an appetite guide, we do have information about the program. You just need to go out to the professional services category, and then you can find the fitness and wellness category page. And then there on the screen you'll see there is our appetite guide, so you have access to that 24/7 and are able to do that and find out more about the details of the program. And Brian has given you all his information, and I know he does a great job to follow up with all of the contacts that he receives on the FITLIFE program, and we'll get in touch with you as quickly as possible. And I want to also let you know that as far as Z Programs Match is concerned, if there's any questions, you can always visit Z Programs Match, not only to find out about the FITLIFE program, but the other programs that we have available. Again, they're at your fingertips 24/7. And I want to thank everybody for taking the time to join us today. We appreciate your business and your interest in Z Programs Match webinar series. Zurich looks forward to serving you as we work together to provide for the insurance needs of our mutual customers. This concludes today's presentation. Thanks again for attending, and make it a great day.